This is our last video for topic 9. And in this video, we're going to look at pricing of products and services. So in order to maximise profits, firms need to charge the highest price that is acceptable to customers. And there are two methods, cost-based and market-based. So we look at cost-based pricing. It applies a markup to some calculation of product or services cost, and it is relatively simple to use. However, prices could be either higher or lower than customers are willing to pay. And this method, cost-based pricing, ignores customer demand. Where this method is used, accuracy of product costing becomes critical. The other way that we can price is market-based pricing. So it's based on some measure of customer demand. It's difficult to estimate, but it allows managers to make better decisions about sales volumes and whether to sell products or services, leading to more success in entities' strategies. It's influenced by product differentiation and competition, and it allows for better decision making. The other factors influencing product pricing are peak load pricing, when different prices are charged at different times to reduce capacity restraints. Price skimming, when a higher price is charged for a product or service when it is first introduced. Okay, so think new releases of Apple iPhones, perhaps. Penetration pricing, when prices are set low when new products are introduced to increase the market share. Now, there are a number of illegal pricing practices in Australia. So price discrimination is one, setting different prices for different customers. Predatory pricing, the act of setting prices low to drive competitors out of the market, and then once the competitors out of the market, raising the price. Collusive pricing, where two or more organisations conspire to set prices above a competitive price. And dumping, where a foreign-based entity sells products in Australia at prices below the market value in the country where the product is produced, and the price could harm the Australian industry. Okay, so let's have a look at costing and pricing a service. And this is worked example 3. Kathy Cook commenced catering business, Cool Kitchens, from her home. The startup costs were platters, plates and cups, all of which are reusable, and they're worth $800. Cooking utensils, $1,200, and a new oven, $2,400. She expects these items will last for 5 years. Kathy pays an assistant $25 an hour, and all food and labour costs can be traced to individual jobs. Other costs include a business licence and insurance. Total cost is $2,200 per year, and electricity, $1,000 per year. Okay, so the indirect costs are allocated to events based on labour hours. So we're going to use labour hours as a cost driver here. Estimated total labour hours will be $800 for the year. So what we're required is assume this month Kathy catered for the events detailed on the next slide. Estimate the total indirect costs of the business for a year. Calculate the total indirect cost rate per labour hour, and calculate the cost of each event and the charge to the client if a 75% markup on cost is applied. Okay, so the events that we've got is the Jones wedding, and for the Jones wedding the food cost is 600, labour hours 25, and the number of guests 50. The Sterling party, the food cost is 350, the labour hours are 18, and the guests are 30. And a corporate promotion where the food cost is 500, direct labour hours 22, and the guests number 150. Okay, so on the first thing that we do is estimate the total indirect cost of the business for a year. So the crockery, utensils and oven are all reusable. So the total cost for these, taken from the information that we had, is $4,400, and they're going to last 5 years. So we take $4,400 divided by 5. So depreciation on the crockery, utensils and oven is $880. The licence and insurance cost for a year is $2,200. The electricity and gas is $1,000. So the total of our indirect costs for a year, the total estimated indirect cost for a year, is $4,080. The second step is calculate the indirect cost rate per labour hour, the overhead rate. So the overhead rate we calculate, remember, by taking total indirect costs divided by the total allocation base. So here the indirect cost rate per labour hour, which will be our cost driver, is $4,800 divided by 800 hours is $5.10 per labour hour. Okay, part C, calculate the cost of each event and the charge to the client if a 75% markup on cost is applied. So the food is a direct cost, and we've got that on the chart. The direct labour, or the labour, is a direct cost, and we're going to put the chart that we had for the number of labour hours for the event times the labour rate per hour of $25. And the indirect costs, we're going to use the overhead rate calculated, $5.10, times the number of labour hours that we have per event. So we're going to slot this all into our table. So the first event is the Jones wedding. The cost of the food is $600. The cost of the labour is $25 times 25 hours is $625. The cost of the indirect costs, so we're using labour as our cost driver. So $5.10 that we calculated times 25 is $128. So the total cost, 600 plus 625 plus 128, is $1,353. So we're going to mark it up by 75%. So to do this, we can multiply it by 175 or 175%, or you can multiply it by 1.75 times 1,353. So the charge to the Joneses for their wedding will be $2,368. For the Sterling party, we'll go through the same process. The food is $350. 18 hours of labour times $25 is $450. Again, we're using labour hours as the cost driver, so $5.10 times 18 is $92. The total cost is $892, multiplied by 1.75 to mark it up by 75%. So the sterlings will pay, or the charge to the client is $1,561. For the corporate promotion, we go through the process again. So $500 is the food, 22 hours of labour times $25 is $550. $5.10 times 22 is $112. So the total cost is $1,162, giving a charge to the corporation or the client of $2,034. So 1,162 times 1.75 to get the 75% markup. Okay, so in summary for this topic, cost objects may be direct or indirect. The full cost of a product consists of direct costs plus allocated indirect costs. Activity-based costing gives a different measure of cost compared to traditional costing. The two main pricing methods are cost-based and market-based pricing. Pricing is affected by a number of factors, and as we've seen, some pricing practices are illegal in Australia. Okay, so that concludes topic 9.